Hi, everybody. Welcome to episode 8 of the Ruined by Set podcast. Today, we have a very special guest with over 25 years of experience in banking and 17 years of experience working in JP Morgan, one of the biggest banks in the world. Please welcome Haarish Chowdhary, the founder and CEO of Ewa. Hi, Haarish. How are you doing?
I'm doing great and I'm glad to be here.
Thank you. So, I want to focus on a very special topic today, which is tokenization, which I personally believe is the future of how finance and investments are moving forward, especially for the retail investors.
Yeah.
So, let's get started straight into it. Tokenization is often considered transfer of real world assets into digital tokens or digital assets. Can you give me a more practical definition of exactly what this means?
Yeah. As in the RWA tokens that we will be discussing, today is real world asset tokens. Obviously, you can create tokens out of thin air.
Right.
But yeah, as in I look at RWA tokens very similar to what happened, with companies getting listed on the stock exchange and, making their shares available,
Right.
for trading. And obviously, a lot of that started in the 18th century. So, it's been a long journey. And,
Yeah.
today when we look at the penetration the stock market's done, the peripheral assets that came out of the stock markets, asset classes like mutual funds, they're everywhere. And, today, whether you are a professional investor, institutional, or a retail investor,
Right.
you have an allocation towards the stock market or the mutual funds market or, corporate debt and so many other things that really came out of it. What we're really seeing with RWA tokens is technically replication of the same process.
Right.
It's actually the same process. In the stock market, you have a company, right? They have a P&L, right? They have earnings. They manage their balance sheet, and if they really do a good job, then you can take the company, take it to the nearest stock market,
Yeah.
say New York Stock Exchange or the Dubai Stock Exchange, and get your company listed. What you're really doing there is you're taking your company and giving access to retail investors, institutional investors, to own a share of in your company. Now, RW is exactly the same thing. Companies could actually list their ownership in real world asset token in tokens, through tokens.
Mm-hmm.
So it's the same thing. It's just that today, when we look at the application of RWA tokens, we're looking at real estate owners now tokenizing a particular building
Right.
in Abu Dhabi. Certain land plots
Right.
in different parts of the world are now being tokenized to make them accessible. And all of this is obviously happening within the guidance and schema of the local regulators. I look at the same thing is going on as we speak, and I'm super excited. The kind of projects that I'm seeing happen in UAE, especially the regulators here are much ahead of the time,
100%. 100%.
as compared to other regulators around the world. So what's really happening in this part of the world, when we look at RWA tokens, is fantastic. In general, RWA tokens are here to stay, and I feel we are in the middle of a big evolution, so to say.
I agree with the evolution part, especially with UAE. It's always the first. You'll never see UAE be the last. So, for example, we have VARA, which is the main regulator in the UAE, I believe, especially with the cryptocurrency and all of this type of stuff. They really are strict with their regulations, from what I've heard. But what's going to happen in the market is you're not going to have lots of illegal schemes. Everything's going to be legit, and it's going to help RWAs grow even faster. Tokenization is going to grow faster because there's going to be the trust in the market. What happens with crypto, especially internationally, is you have lots of pumps and dumps. People are just trying to get in the market, make some quick money, and run away. But when UAE is the base of that, which is what they're trying to do, that's going to get heavily avoided.
Yeah.
Analysts are predicting that by 2030, we're going to have up to $16 trillion in assets under management in terms of tokenized assets. What do you believe is driving such growth?
So, what we need to understand is the ability of the technology, right? As in, today, if you have to take your company and get it listed in the stock exchange, obviously there's a whole process that you need to go through. With RWA tokens, you don't necessarily have to wait for your company to reach a particular stage in its own evolution journey of getting listed and going through the whole jing bang. You could be a real estate developer, pick a project, right? The latest project that you're about to launch, or you've already launched it, it's getting completed maybe in 6 months or a year down the road, and only get that particular project in RWA, making it accessible, the ownership, the fractional ownership of that particular project accessible for investors to come and participate. That is the game changer. I also want to just touch base on the aspect of VARA being strict. I feel the view on anything being strict or lenient is who's watching.
Right.
So obviously, for people who want to run Ponzi schemes, it may look like being strict, but at the same time, somebody who's genuinely trying to create an RWA token,
100%.
a lot of the rule book is pretty straightforward. I feel what comes first are asset classes that have not been able to make their fractional ownership available. Obviously, the stock market is well established. It's been around for a couple of centuries now. And every other asset class like mutual funds, ETFs that came out of it are all available. So what's not available today is fractional ownership in real estate, in lands,
alternative investments,
factories, investments,
businesses.
And VC funds, your access to PE investments.
Right.
And I feel real estate obviously is leading the way as we speak, primarily because if you look at any asset class, the biggest asset class in the world right now, real estate, right? Everybody
100%.
today in the world, and it's very human nature to own a share of land in the world.
It's very cultural on that aspect too.
Yeah, right. And any part of the world actually, so if you go from east to west and you ask people their views on ETFs and mutual funds and stocks and bonds, you'll see a variation. Also culturally, right? Certain cultures don't necessarily allow you to invest in bonds, for example,
right?
Because of the nature of the asset,
how the business works,
the
exactly.
asset class,
yeah.
But real estate,
it's always been
everybody,
100%.
Right? Everybody wants to own,
especially us as Indians. We've seen people who have better opportunities. This is again bad financial choices. You have better opportunities to invest in Dubai, an example, but people still choose to put their money in investing into India in terms of land plots, because culturally they've just been brought up that way, that the goal is always invest in land, or always invest back home. But the key difference is it's always investing in real estate, whether it's land, whether it's a built villa, or whether it's an apartment.
Yeah, I think it's not necessarily only about India. Like look at the biggest asset class in China, for example, right? Like everybody owns more than one key.
Yeah.
And that's nothing different than when you go to California, Hong Kong, Japan, Europe, the whole of African continent. I feel real estate will lead the way as far as RWA tokens are concerned, but it's not going to stop at that. What's the beauty of RWA tokens is you could be a Rolex collector
100%.
with 30 watches, and if there's a way to validate the ownership, validate the valuation, you could launch your own tokens.
100%.
You could be someone who owns a bouquet of Airbnbs around the world. Could be 10 Airbnbs and 20, 50, till you can justify the revenue. You could tokenize the revenue
100%.
and let somebody else in the other part of the world participate in this journey with you, saying, I already have 50 Airbnbs, I have 20 Airbnbs, I'm raising funds to have another 20, and you could issue it through tokenization. That's the beauty of RWA.
100%. People are believing that tokenization is another crypto fad, like NFTs were at a certain point.
Yeah.
Do you believe that this is true?
Can be true. We've always seen the emergence of Ponzi schemes when certain asset classes emerge or they get popular.
Right.
Whether it was still with equity, we've seen IPOs happen in dozens and hundreds in certain parts of the world. It's happening in India right now, right? We're seeing so many IPOs, and I feel there's going to be at least 4 to 500 IPOs in the next 18 months or so.
Wow.
So when certain investment highway gets popular and more people want to go there, there's always going to be Ponzi schemes. There's
Right.
always going to be the bad characters trying to do something. Obviously, we saw NFTs
Right.
happen during COVID and the post-COVID era. I feel it's going to be the same with RWA. But what's also happened is the regulators have seen some of this occur. They're much ahead now when it comes to coming and setting the rules of the game, so to say. And investors have become very smart.
100%.
I'm speaking with
100%.
institutional clients. I'm speaking with fund managers who want to invest or allocate funds towards RWA tokens. They're asking the right questions, and so are the end investors. I think the investors have become smart. They're
Yeah.
getting smart with AI.
100%.
Now
AI
you
is
can
huge in this equation, to be
you
honest.
can ask AI and get educated about RWA tokens in a few hours.
In a few minutes, to be honest, nowadays.
Rather than someone walk with a package.
Yeah.
Like back in the day, when we used to buy mutual funds a couple of decades back, you needed like a mutual fund salesperson to come over,
Wow.
show you brochures and whatnot. People have become smart. That's exactly how real estate was sold. You had to go to the nearest real estate developer office like MR, stand in queue, see the brochure, see the physical, models,
Yeah.
the miniaturized models, and then make a decision. You don't have to do that anymore. So AI is curating the knowledge base. Everything is digital. It's
Right.
available in an app. And also, we've started to see the right things happen. For example, now you have players like auditors who will now audit your RWA tokens.
Wow.
Your tokenomics and white paper is now available on websites that the end investor can read. And at the end of the day, the regulator, where are you buying the RWA tokens? And like you said, if you're buying them within the gamut of an amazing regulator like VARA, then you can feel it's safe haven.
Right.
But I still would advise the investors to ask the right questions, get informed,
100%.
and then invest their money.
Beyond transparency and liquidity being a benefit of tokenization and fractionalization, what would you say would be the other benefits for retail investors and for institutional or government, especially government?
I would say the transparency is there, right? When you're trying to invest in a token, it's available on certain exchanges. You know where they were issued, which regulatory body they were issued under. All of that information is available digitally today. So I feel that's a huge plus. Liquidity is a huge plus. Liquidity can also be a huge minus. In an event of bad news, we've seen tokens lose their value, overnight. So obviously that's a threat as much as it's a positive. But that said, I feel the biggest benefit of tokenization is fractionalization.
Right.
And the ability for an investor to own a share in something that today is not possible.
Right.
What, according to you, Sid, is the lowest value, denominated value of a real estate house in Dubai today? Like, what's the range?
$500,000 dirhams.
$500,000 dirhams.
$150,000.
Now imagine today you can log into certain applications in Dubai right now as we speak and invest as low as 500 dirhams.
Stake. That's exactly what stake is, right?
Yeah, it's amazing, right? So that, in my opinion, is amazing. The second aspect is cross-border investments.
Right.
If today, obviously, the equity market, ETFs, today I could be sitting in India and UAE and really investing
In the US.
Buying shares in the US. But that took 200 years to evolve.
Right.
Digitization and your ability to buy things cross-border in the tokenized world happens on day zero.
Right.
And that's the beauty. So what took maybe 50, 100 years in another asset class, it's going to happen
Like this.
in RW in a few years, I would say. I feel that's the beauty of this game.
We've seen that real estate is taking the lead with RWAs. it's been more popular now, but in the past there still were very few amount of companies that were taking care of tokenization. Real estate, if you put it to the side, upon your predictions, what assets do you see next that are gonna be really filling up the market, asset classes, especially in
I would say
tokenization?
that the bond market has always been something that a lot of investors, all the way from big mutual funds, all the way to the last real estate, the last retail investor go towards. So I feel the bond market is and will be disrupted
Uh-huh.
in the right way,
In the
in the
right
right
way.
sense.
100%.
The smallest ticket size, for example, today, to own a corporate debt, a corporate bond is about 200,000 US.
Wow.
Yeah, um, and imagine whatever equivalent in the Indian market, in the Chinese market, the European market. So it's always a little bit of a bigger ticket size, and it's been done and designed in that particular way for all the right reasons, by the way. So imagine now for an investor to buy tokens issued by JP Morgan, buy tokens issued by BlackRock, by Blackstones of the world, Goldman Sachs of the world,
These would be
and
A-starred
allocate
bonds.
like 100 dirhams and still get the safety of owning a US Treasury
100%.
or a corporate debt. I would say that's an asset class I'm very bullish.
100%.
Is going to get very popular in the tokenized world. And the other asset that's going to get very, very popular is the VC
Yeah.
space. Today, if you call any VC and a PE fund manager, they're going to ask you for a big check.
Yeah.
All right. Now imagine that fund is in motion. They've already invested and they're doing all the right things, and that a portion of the fund gets tokenized. The end
Wow.
investor now can come in with a 100 dirham, 500 dirham token size, invest in startups through those VC and PE funds. So in my opinion, my prediction is those are the two asset classes which will get very popular.
That's fantastic. Now we're on the track of the US. BlackRock, one of the biggest firms in the US, has tokenized over 2.4 billion worth of assets, dollars, just in August of 2025. Why do you think traditional firms like BlackRock, a very, very old firm, is taking action so fast?
As in, BlackRock happens to be the largest owner of AUM in the world,
Assets
right?
under
About close
management.
to 18 trillion now, if it's
Wow.
if I'm right, yeah. So they're growing the AUM base pretty rapidly, obviously for all the right reasons. My view is certain organizations, if you look at their track record, they've always been adapting at the right time when new things come by.
Right.
Dematerialization of shares was a new thing in the world. Adaptation of computers was a new thing at one point in time. Using robotics, bots, software that we now call AI for automating certain redundant tasks. The list is pretty long, but certain organizations have always been
Number one.
in the forefront of adopting this change. Slowly, they'll experiment, they fail fast, they learn from it, and then they come back again. And not only BlackRock, I can speak for other bigger organizations that have seen these changes and have survived, for a very long time. Firms like JP Morgan,
Yeah.
Blackstone, Goldman Sachs are here
Yeah.
to be ahead in this game. And I'm not going to be surprised if this $2 billion
Yeah.
ends
It's
up
going to
becoming
grow
a $1
very
trillion
quickly.
investment very soon.
That's fantastic. Linking this to the UAE now, firms like Pripco and Stake are real estate tokenization firms in the UAE, and Stake recently hit 1 billion dirhams worth of assets under management. Could we see the UAE being a hub for fintech firms to take off of, especially within the tokenization space? And would the UAE market be fit as a consumer to be able to receive all of those services?
Oh yeah, yes, and yes. So I'll start with the second yes first, right? Is UAE fit? Absolutely, 100%, 1000%. Primarily because the regulators started early. They were one of the first ones in the world to start putting the rule book together. So obviously they're learning from all the use cases that are going on. I know a lot of startups that have reached out to Vara
Hmm.
with their with their use cases. People want to tokenize Rolex collections. People
Yeah.
want to tokenize the oldest car in the world, and so many other use cases. Like I was saying, bouquet of Airbnbs.
Whiskey
Uh,
barrels,
yeah,
casks, all
yeah,
of that stuff.
anything that has value, you can prove its value, and that value is permanent. All right,
100%.
it's not just there for the moment. um, IP for songs, for example, right? And things like that. I feel UAE is going to write the rule books. A lot of people, a lot of regulators around the world are watching them and will adopt some of their framework for their own country and for their own location. So yeah, the answer to your question is, and then the first part of the question was, um, what can be tokenized, and UAE started with real estate. You it's easy to say that, oh yeah, we started with real estate. How difficult it is to start with real estate, because you need to understand, you need to get real estate right. Like I said, real estate is the largest asset class in the whole world. You cannot get wrong with real estate. It was
Right.
maybe it was easier to start with the Rolex collection because only few investors. The supply is limited, and therefore the investors are limited too. But in real estate, the supply is pretty large. You've got to
Right.
get it right, and the fact that they started with that asset class, and I feel they've done an amazing job. uh, it's a market that's going to explode,
Yeah.
and I'm very excited to be in UAE, and I'm also excited to see the kind of influx of investors and startups that are coming in the UAE to tokenize their assets.
That's fantastic. With VARA in the equation as the regulatory body for fintechs, blockchain technology within the UAE, they need to strike a balance between being a little bit lenient in terms of helping firms innovate and with being strict. Strict in the terms of keeping people who have bad intentions out. What exactly are they doing from your experience to keep in this balance?
I think couple of my observations have been that a you need to ensure there's a whole ecosystem of enablers. The regulators in general, their job really is to ensure that they're keeping an oversight of the ecosystem. They're taking care of the issuers of the tokens, and at the same time also taking care of the end investors who invest in those tokens. Right?
Right.
That's really their prima facie job. But one of the things that I've observed in this part of the world is that there is a very healthy ecosystem of enablers.
Right.
People who are able to, understand the regulations and then work with the regulatory bodies to get licenses, for example, right? And that ecosystem is thriving across the UAE. It's very easy today to get hold of a intermediary
Right.
who can take your application, understand your use case, and then work with Vara to get you the licenses.
Right. Right. Right.
So I felt that was amazing. The other aspect is there have been emerging digital banks, for example. So you can now get your Vara license, and then for the end investors, there's a whole hub and spoke model that's been adopted in the UAE, where you could be an investor with a digital bank account in India,
Right.
but now you can also open a digital bank account in UAE, transfer fiat to crypto, and vice versa pretty easily. And then finally, the startup ecosystem.
Right.
I feel you mentioned a couple of startups and applications. I feel that number is going to
Skyrocket.
skyrocket into a few dozen
Yeah.
as early as middle of next year.
Wow.
And think about who the beneficiary of all of this is going to be? The end investor.
100%.
Yeah,
Because they
more
get
the
to
merrier.
diversify.
Yeah, more the
100%.
merrier, better pricing, right, and better options. Because not all startups are going to attack one use case, right? So you'll always have
That
a
diversification
few
is
startups taking care of real estate, a few startups taking care of the other asset classes,
private
like
equity, art,
the
luxury
bonds.
goods, all of that
Exactly,
stuff.
exactly. So, listen, I'm very excited, and like we say, Dubai is the land of supercars, and you can speed on the highway, and that's exactly what's going to happen in the RWA space. I think the highway is created thanks to the government,
100%.
thanks to the regulatory body. Now the use cases, the cars, the investors, the cars are going to land, and they
As
will
they
be.
come in, as they get built through
We
the
are going to see
stages.
a lot of fast-moving cars on this highway as well.
With all these assets that we've been mentioning so far that can be tokenized, what green flags in an asset do you see that can be tokenized that are one, either in best case for a retail investor, or two, in best case for a institutional investor?
I think the green cards are, when you're an investor, the green card, the checklist is the same. Whether you're investing in equity, mutual funds, ETF, bonds, the green cards are, what are you investing in? What's the underlying asset? The valuation of the underlying asset, is it permanent? Is it temporary? Is it something that we feel will grow over a period of time? And we're also looking at long-term period of time, not only 12 to 18 months, but also looking at long-term, something that you can invest in for 5 to 10 years. That's the checklist. So when you look at RWA, you need to ask yourself a question saying, what's the underlying asset? So say the underlying asset is real estate from one of the top developers here.
Right.
All right. So amazing, right? Now there is an underlying asset. Is the valuation of the underlying asset permanent or temporary? In this example, it's permanent.
Right.
There could be volatility in the valuation.
That's in
but
practically most assets.
we're not seeing the valuation being wiped out. We've seen Dubai real estate give returns much better than certain stock exchanges around the world.
100%. Especially in the amount of time it's happened in the last 3 years, it's astronomical.
Yeah,
what the
and
returns
then
are.
the third point is, do we see the valuation stick around for the long term, 5 years, 10 years? And the answer again is a yes. So I would say, if you look at these three elements, and if anything fits into these three, it's an absolutely go. And then be smart enough to read volatility. Be smart enough to exit at the right time.
Right.
You see what I'm saying? Like, it's the same rule book with any assets. As in, if somebody offers me an RWA token today backed by Rolex watches, I'll say, hey, listen, let's go for it. It's in the news. It's the market's been pretty steady. Yes, pretty volatile, but at the same time, we've seen the valuation has been pretty sticky.
Right.
And will it be sticky in the long term? Absolutely. Like, are there any better watches around in the world? So when you look at from that lens,
Right.
Coming to your example of an art collection, who is the underlying artist? What have they done in the past? What are they doing in the future? Very similar to what you look at an underlying company. You look at EBITDA margins in the past, you look at EBITDA margins in the future.
Projection.
You look at the founders, you look at who are they? What are they going to do with this company in the future? How are they scaling the business?
Right.
So if you ask the same questions in a very different tone, but the lens is the same, you have a winning formula for yourself.
Wow. That is fantastic. Today, I am a business owner. And let's say I want to scale my business. Let's say I own a podcast studio, right? And I am brand new. I have one studio which I've, let's say, paid off myself. And I'm seeing the opportunity to expand. I want to expand. I want to open more branches throughout Dubai. How could I launch my own token so that I could raise funds while also being able to work with retail investors? How exactly could I launch a token?
So basically, tokenization is your first step in issuing your own, so to say, IPO. Obviously,
Right.
it's not an IPO,
Yeah.
but I'm just using it as a metaphor. So you are a business owner, you want capital infusion, you want it done in an easier way, right? Because today, what are your options? Yeah, you can go to friends and family, borrow, right?
You take a bank loan.
Yeah, you could go to a bank, borrow loan. You can also go to a large institution and bring them as a VCP, depending upon where you stand in the whole evolution of your own startup. Tokenization allows you to bring capital and make it easier. So obviously, your first step is to document performance, very similar to what you would have done, in an IPO stage. So, what has been your returns? How clean are your books? Ensuring bank statements are all available, and then you need to go to an authorized token platform, which is not very difficult to find in the UAE, and then working with them, to create a token. I have seen an end-to-end journey being done in 30 days.
Seriously?
Yeah,
30 days?
Yeah, it's that easy. Depending upon who are you targeting to raise money. So it's much easier to issue tokens which are meant for professional investors as compared to creating tokens which are meant for retail investors.
Right.
So you gotta pick your highway. Depending upon which highway you pick, they're regulated differently in the same region, and then depending upon which platform you go with, can be pretty smooth.
Ending off our podcast with one last question. We've spoken about the positives of tokenization. What are the risks associated with tokenization? One, to the retail investor, and to, in general, to all stakeholders of it.
So I think the biggest risk in any asset class investing is misinformation, right?
Right.
I could come to Dubai, meet a broker who gives me false information in respect to which project I should invest in, and then bear the repercussions of that bad advice and information, and that's exactly the case here as well. You need to be informed. You need to look at data points. Thanks to AI, thanks to
it's all more accessible now.
Yeah, thanks to internet. You have availability and access. A lot of my clients call me today, thanks to my company, to launch their tokens. So we help, we consult companies in respect to helping them launch their tokens, and at the same time, helping VCP funds and large institutions allocate in the right tokens as well. In the same way, just reach out to the right advisors. Ask as many questions.
100%.
Don't be ashamed to ask the most stupidest questions.
Yeah.
Including asking them to educate you on the landscape of saying, hey, what is Vara? Who are they, right? And questions like these, and then navigating your way through a few questions that I'm going to leave your audiences with. Number one question should be, what's the underlying asset? Where is the asset custody? So if it is a Rolex watch collection, if it is an art collection, where is the custody? Is it in an art gallery? Which art gallery?
Or is it in somebody's backyard? You never know.
Exactly. Or in somebody's basement.
Yeah.
So ask that question first, because the asset has to get protected. So that's number one. The second question you should ask is, how liquid is this asset? Primarily because certain investors come in for the long run, right? If I invest in an RWA token which is backed by an art collection, I'm going to look at it in the long run, because I'm going to give it time for the valuation to peak.
Right.
And I'm not in a hurry to sell. But at the same time, if you want liquidity, then maybe real estate is a better choice for
100%.
you. So that's that. And then third is going to be, look at tokenomics, look at the white paper, and every RWA token has to be audited by an agency, approved agency, and that audit report is available on the same platform where you're buying it from. So read through the audit report. The audit report tells the consumer how safe is the tokens in respect to hackability, the vulnerabilities that come with the digital world, not only specific 2 tokens, by the way. Um, you know, how are they designing the whole token? The accountability, the transparency of fees, for example, is all mentioned in the audit report, the tokenomics and the white paper. So spend that 15-20 minutes, use an AI to summarize it and read it yourself, and then ask your
100%.
advisors those questions, and then invest. Because once you invest, it's a click of a button. That's it.
100%. And that's where money going.
Yeah.
Awesome. Thank you, Haarish. It was a pleasure having you on the podcast today. I appreciate all your insights, and I'm looking forward to something more.
I am very excited to be here. I'm very excited to speak about RWA tokens. I think we are one of the first people and
Yeah.
podcasts to really start talking about this conversation.
In depth, especially.
I hope more people speak about this, and I'm always excited to have more conversations with you.
Thank you.